Welcome back, investors, to Ticker Time News. I am Adam, and here we are for another market close live stream. Quick take on the market at the beginning of this live stream, and then your questions at the end. So hopefully you will be welcome, because I am very appreciative of having you here with me. Okay, let's just get right into today. There was hardly anything that happened today. The major indices were very choppy today. I think that was the key word for today, choppiness, right? The market was very choppy, and the major indices, they stuck to a pretty narrow range. As a matter of fact, if we look at the 5-minute chart, it's going to look like pretty much a flat line. I mean, here's today, right in the middle of your screen. Flat, barely moved. The S&P 500 was down 0.07%. That's pretty flat, almost like Apple's actual flatness, 0% yesterday. And then we have the Dow Jones. It was up 0.27%. The Nasdaq was up 0.18%. The Russell 2000, though, that is the one that had a little trouble today. That was down 1.12%. And then we have Bitcoin actually up 0.31% today. And Ethereum, that had some trouble. It was down 2.24% today. So a very mixed day. Most of the major indices very flat. You got Ethereum and your Russell 2000. Those are the major decliners today. But even though it was flat, it was pretty volatile price action. There were some swings. You can see it here on the S&P 500 on the 5-minute chart. The indices set early session lows, and then this kind of rolled along for the rest of the day. Positive here, negative there, positive, negative, back and forth, right? There was also more of a negative bias in the air than what the major indices showed. Rate hike and growth concerns weighed on trading mentalities. There was also very little conviction from buyers today, as evident by the advanced decline line. Decliners led advancers by about 2-to-1 margin at both the New York Stock Exchange and the Nasdaq. Another factor that showed growth concerns were the mega caps, which outperformed the broader market. The Vanguard Mega Cap Growth ETF, ticker symbol MGK. And remember, you can follow along at home. There's a link in the description of this video. Take a breath. That will take you to TradingView. You can sign up for a free account. Doesn't cost a penny, and you can chart right along with us. Now, the MGK is the ticker symbol for the Vanguard Mega Cap Growth ETF. It was pretty flat today too, right? But it was up 0.31%. What was the Nasdaq? Nasdaq was up 0.18%. So it helped to pull the Nasdaq up. Now, you can see here, right at around on this particular ETF, right about 184, that's where buyers were kind of stepping in. And that's almost halfway between the tops and the bottoms of the moves that it made today. We go look at the daily view on this chart. You can see it's in a trading view, and it lost a bit yesterday, lost some ground yesterday, but it's working its way back up. Maybe it'll get to the mid-range, or maybe it'll just keep falling from here, because it has done that before. Just a couple weeks ago, it got midway through on this price channel, and it just fell apart. Now, we do get big inflation reading tomorrow from core PCE. We'll talk about that a little bit later. All right, moving on. So this was up 0.31%, right? Or just say 0.3%. Now, you want to compare that with the Invesco S&P 500 equal weight. So every stock is equal weight, right? That actually lost 0.6%. So that's what shows me that the mega cap growth companies, they outperformed the broader market today. And we can look at the Invesco S&P 500 equal weight ETF. The ticker symbol is RSP. And we'll see that 0.6% decline on that today. Let's take some of this highlighter away from yesterday. I totally forgot to do that. That is a big old mess there. There are some gaps in this one that will end up getting filled eventually. My goodness, there was a whole bunch of highlighting going on in here. Several gaps here that need to be filled on the top and on the bottom. Now, today, we halfway filled in a gap going down. Maybe a third of that gap got filled in. Should have cleaned this up before we got started. But this is interesting right here. As a matter of fact, I'm going to clone this rectangle here, and then I'm going to move it down to this gap that we have that will need to get filled. And you can see the wick of the candle dipped down into this gap today, but it found support there. So if we go back to the gap up and rally that we had on June the 24th, that gap up, the bottom there, held up as support for the RSP right there. You can see that there. So that's a gap that will need to get filled in on the way back down. And it kind of correlates to a gap over here to the left, right about here as well, that lines up with that. So that's a gap that will need to be filled back in as we either continue to move down if inflation read is bad tomorrow, or continue to move up. We have got two much larger gaps to the upside that need to get filled in. So they will get filled. There's no doubt about that. All right, let's just keep moving on. The Russell 2000 and the S&P Midcap 400, they were both down 1.2% and 0.8%. Small caps, mid caps, that's where the pain was today. Now, the solar energy sector, solar stocks, they got hammered today, completely slammed. And we'll start with SunPower because they got slammed right out the gate. Ticker symbol is SPWR for SunPower. Just completely rocked. I think 14%, 10.7% is where they ended the day. I mean, look at this. The past 2 days, this is the daily view. Past 2 days just got completely wrecked. Now, why did SunPower get slammed? Well, Wells Fargo came out and initiated coverage with an underweight rating and a $17 price target. Now, the analyst for Wells Fargo cited U.S. policies that are not supportive of solar growth. And, you know, you leave yourself scratching your head. Well, I thought this administration was all for clean energy. Well, apparently there's a problem with solar. The analysts also noted that the slowing housing market, which the housing market is slowing, will likely affect new solar sales moving forward. Wells Fargo also did damage to SunNova Energy. The ticker symbol is NOVA, Nova, and also did damage today to SunRun. SunNova here, down 5.1%. Sunrun, which the ticker symbol is RUN, run, they kind of rent solar panels and make it really easy for consumers to get. They were down 6.3%. So solar energy stocks just completely battered today. And the Wells Fargo analyst did give a rating for SunNova and Sunrun as equal weight. So maybe they'll do a little bit better. They also gave them price targets between $22 and $27 a share. Then First Solar, they came out today pretty strong, swinging as well. Ticker symbol for First Solar is FSLR. Now, the First Solar CEO said today that his company will not build a new factory in the U.S. And he cited uncertainties over trade policy and tax incentives. That's just not good. We want this manufacturing here at home. Come on. We need this. We need the jobs. We need the technology, flat out. We need it. Now, he also added that U.S. policy is not supportive of solar growth. I find that interesting. And then we also have a problem with the U.S. importing products, raw materials for solar panels from China. This is not good. Hopefully this gets squared up and fixed, because solar energy, isn't that clean energy that we need? I would believe so. And there was a big boom in solar during 2020, part of 2021, with all the home renovations that occurred. Everybody was adding solar. We need these companies to stay here at home in the US and not go abroad searching for another home. So First Solar also did mention that they were looking for Europe or India to build their next plant, but not the US. Got to get that straightened out, Biden administration. So come on, work with them. All right, of the 11 S&P 500 sectors, let's pull those up. Remember, if you want a copy of these, just let me know. I'll put the link in the live chat. And there we go. Right-hand side of this column over here, you can see it was a mix. Energy was the biggest hit today. Big hit. Okay, just making sure I had them all there. All right, so 6 of them did close in the green. Some of the outperformers were counter-cyclical sectors, including healthcare up 0.9%, consumer staples up 0.5%, and utilities up 0.1%. Now, here's a few consumer defensive stocks that continue to move higher. If you're looking for a place to make a few bucks in this bear market, this seems to be a place where you can do that. McDonald's is one. The ticker symbol is MCD. Pull up the chart here for MCD, McDonald's, and you can see they are moving in the right direction. When I pull this chart together here, the end of March, when we had our snapback rally, they also, McDonald's that is, had a big rally. And then it kind of has been swing traded, right? Up and down, up and down. But if we could draw a line, a trend line across the top right here, right? We could also draw a trend line right across the bottom here. And now you can see this wedge pattern starting to form. Price action is tightening. Eventually, this is going to break out of this. And most likely, it's going to break out to the upside for McDonald's. This is a place where even in times, tough times, people still go to McDonald's, no matter what, right? Sometimes you can even get a cheaper, quick meal at McDonald's than go shopping at a grocery store. So when we get into a recession, we get into harder times, McDonald's is a place to be. PepsiCo seems to be doing pretty well recently too. PEP is the ticker symbol. I also looked at Coca-Cola. Pepsi seems to be moving in the right direction. Coca-Cola seemed to be kind of stuck. I know there's some good dividends here too that we can't forget about. Pepsi has a dividend of 2.8% right now. And you can see that it's been pretty strong since the middle of June, just moving in the right direction there. It also has a bit of a wedge coming down. Interesting thing, it's at the top of the wedge. So maybe now's not the time to buy in. Let this pull back some and, maybe it'll get down to the bottom, which would be somewhere down here. And then you can go in and open a position and ride it back to the top of this wedge. Just a couple ideas there. And I've got one more to look at too. Let me just clean up this chart here a little bit. It's Archer Daniels Midland. Ticker symbol is ADM. This is another one. It has been moving in the right direction recently. One thing that is interesting about them, if you look over the long term, this 200-day moving average when the company's gotten, or the stock has gotten real low, has been support. And you can see most recently it dipped below that 200-day moving average, and it's moving back up. What I would watch for is across the top right here, maybe when it gets to about 84, 83 in that price range, that could be a point of resistance for it. And then, of course, it would probably head back down, make maybe a new low, or bounce off that 200-day moving average. That would probably start to flatten out as it moves up. So you've got those three there. That customer, or that investors, not customer, I'm thinking I'm a customer at McDonald's, that investors seem to be moving into here recently. All right, let's keep moving on with the stock market today. The cyclical sectors lagged today. Energy, it was the biggest decliner. Let's pull up energy, down 3.4%. How's it going? Glad to see you here. Energy, it is right here between our range. It was down again today. So with energy, could it just move sideways for a while, like in between these areas? That's what I'm starting to lean to, unless oil starts to pick back up a little bit. That's when I think energy could have a breakout to the upside. I would actually like to, for a trading or investing situation, I would like to see energy back in its trading channel up here. I know for the consumer, having energy prices lower is a good thing. But a trading perspective, I'd like to see it down there. Now, let's look at oil real quick, USOIL. And here we go. Let it load. It's back in its trading channel. It had a pullback today of 2%, $109 a barrel. But it stayed in the trading channel. It's also hugging that 50-day moving average, which is a very important average for it to follow. Now, what I'm hoping for here, because I'm looking for a trade. I'm looking for a trade here. Oil bouncing off of this bottom support area. That would be wonderful. You could get a long position here to halfway up in the channel, okay? Put a stop loss of a few, maybe a percent below where you get in, and ride it up halfway. Take a third of your profits there. If it goes up a little bit more, take a third of your profits that are left. If it goes up to the top of the trading channel, that's when you'd cash out. So I am looking for that trade. Today, it just didn't do it. It pulled back, which obviously I believe gives us a better opportunity as long as it doesn't go below this line here. However, I will add, if it does dip down below like it did in this area right here, I'd want to see a green day before getting back in, because getting in below this line here, you want to make sure that oil is back above it before you get in. So as oil, we have a green day, oil is going up, and all I'm doing is adding a bunch of highlighters here to make it harder to see. But like what occurred when it dipped below, we want to see a green day up to it, and then we want to see it break through it. That's when the breakthrough. That's when you want to get in on a long position. Right now, what I think it could be doing is back testing from breaking through. We had a green day up, and now we're back testing this bottom of the trading channel. And now, if we accelerate off of this, that is your sign to hop in and play an oil trade. That's what it looks like to me. This looks like it's pulling back, back testing it, and then possibly going forward. That's what I would be looking for. Okay, moving off of oil. Real estate also did bad today, but relative to energy, it wasn't that bad, down 0.8%. Financials down 0.7%. Industrials down 0.6%. I'm sorry, financial is down 0.6 as well. So a big range, most of it flat. I mean, goodness gracious. If you look at, what do we have? Utilities here, 0.05%. I mean, call that flat for utilities. So not a lot of movement here. All right. Let's keep going. The ones that I just mentioned, they all closed in the red. And that helped to further fuel the growth concern narrative, right? Rate hike concerns were fueled this morning by Cleveland Fed President Mester, who is an FOMC voter. That's important. Saying she would rather see a 75 basis point rate hike in July if conditions remain the same. We also had Fed Chair Powell. He gave a speech today. He was on a panel too. And for his part, he acknowledged during his forums talk or speech, however you want to frame it there, that the importance of fighting inflation is worth the risk of slowing economic activity. And quite frankly, it didn't seem to bother him about slowing the economy down or even over slowing the economy down. It's inflation that he needs to fight. If the economy slows down, If the economy slows down too much, we'll worry about that when it happens. That's the kind of feeling I took from it. Which was another way, I think, of saying that it will be challenging for the Fed to achieve a soft landing. So, I think the Fed is trying to communicate to us that, I don't know, they don't have a handle on what's happening. And I think they're trying to feed the consumer that it will be all right. We won't see a recession, even though we're probably in one. But I think it's a little information comes out, a little more, and then we finally get to the reality of where we are. Is it me, or do analysts always guide down, up, to the obvious? Yeah, I think so. I think they do. I think analysts are people too. They make mistakes. I don't know. What happened with solar today, that was just mind-boggling. I get the problem. I understand it. If the U.S. is going to have stricter tariffs on raw materials coming out of China due to worker issues, I guess I could say, then solar in America, the companies are going to have to find another way. They're not going to be able to get the raw materials from China. They're going to have to find another way to get those raw materials. Or what they'll end up doing is going and moving to a country that the tariffs on China on the raw materials that they need to build the solar panels isn't a problem. So I get what the analyst did today with solar, but at the same time, I would imagine there's more than one place, more than one supplier, and hopefully these solar companies can work it out. Now, Treasury yields today, they also closed lower. The 10-year fell 11 basis points. US 10Y for the 10-year, 11 basis point fall today, back down. There is a range here that it is staying in, and let me just clear this up a little bit. The range here is real tight. There's a bottom right about here where it sits right now. You could call it 3%. It's about 3.08% to get really narrowed in there. And then there's a resistance line up here, and that's about 3.19%. And it's really just moving sideways. And then we have the 2-year, US02Y. Now the 2-year, it fell 7 basis points to 3.07%. This was curve flattening trade today. If we take the 10-year US10Y and then in TradingView, we divide it by US02Y, press enter, this shows you the inversion, right? We are 1.014 points away from another yield inversion. That's it. I mean, we're almost at it right now. We are nearly at it right now. Now, an inversion occurred back in April. Remember that one? I believe it was April the 1st. Yeah, April the 1st. So once this gets to 0.99999, etc., that's when it's inverted, right? So we're not that far away from another one happening. But to give you the facts, the Fed may consider this yield inversion right here as significant because it has predicted recessions. But what the Fed really looks at is a long-term and a shorter term, the 10 and the 3-month, the 10-year and the 3-month. So you can do the same US10Y and divide it by US03, and we get the 3-month, not the 3-year. And press enter. This is the inversion that the Fed pays closer attention to. And right now, 1.742 is where it stands. So 0.7 of, or 74 basis points right here is the difference between those two. I'm sorry. 1.7 basis points. My apologies. Difference. Like AMD. Yeah, you know what? AMD got a bad rap. Got a bad rap indeed. AMD down another 3.4% today. Let's see if it's got it here. What 14 analyst ratings have to say about AMD? When was this? June 29th. Total ratings, 6 bullish, 4 somewhat bullish, 4 indifferent. Okay, last 30 days, 1 month ago, 2 months ago, and 3 months ago. I mean, that's interesting. Within the last quarter, AMD has observed the following analyst ratings. I mean, total rating, 6 bullish, 4 somewhat bullish, and 4 indifferent. But you have news come out yesterday that just damaged AMD badly. 6.2% yesterday. But I mean, right here, 14 other analysts put a bullish, somewhat bullish, indifferent. So 10 are in the bullish camp. And this is, over the past 3 months, right? Over the past 3 months. So, and one analyst note, I mean, it can really rock a company, rock a stock. And like we saw today with solar, I mean, it can totally rock an entire industry. The only thing that I can say about that is just remember that what happens in the market is always an overreaction, right? People freak out, they get scared, they close out, they jump in, they FOMO. The market's always an overreaction. That's why the best investor, the best trader is the realist, right? You buy from the pessimist and you sell to the optimist. That's the realist. That is the only one who actually makes a profit in the market. Have you looked at CSCW? No, I have not. I have not even seen this company. Color Star Technology. Penny stock, 13 cents a share. I'll be honest with you. I don't mess around with penny stocks. Education company which engages in the provision of online and offline music education. That's interesting for sure. It offers a professional artist training platform that features exclusive content and live interactions. That seems interesting. Also does film, TV. That is interesting. I mean, it's up 51% in the after hours from 13 cent to 19 cent. That's interesting. That's an interesting sounding company too. But I definitely don't mess around with penny stocks. Oh, no problems. No problems. And AH. I haven't looked at AH before either. And 8 cent. What does it do? Healthcare services, which focus on medical cannabis healthcare solutions. It operates medical cannabis care through medical cannabis clinics, processing and distribution facility, and innovative research at brands include. Okay, that's interesting. Headquarters in Canada. Just completely flat today. Yeah, that first one with the music education, that sounded really, really interesting. Yeah, thank you for asking. Greatly appreciate the question. Penny stocks, they can just react, and just talking about how the stock market can be an overreaction on its moves. Penny stocks can really act that way. As we saw with the music one, what was that? CSCW. That one being up 51% in the after hours. I mean, they can just move real quick, real quick. I was just meaning after hours. Yeah, I don't know why it's moving. Oh, after hour. Okay, I got you now. I got you now. All right. This one does sound interesting. Why is it moving 51.5% in after hours? Well, let's see. This is the let's see. Oh. Color Star Technology. It's definitely not one that gets a lot of coverage. I just did a quick Google search, and I don't even see why it's moving in the after hours. Huh. Interesting. If we talk technical about it, I mean, it's definitely in a very bearish setup. But again, it's a penny stock, so sometimes technicals don't really amount to much. I mean, you go to the 5-minute chart, I mean, there's just so many gaps and holes. It's really hard to pick out what it might do. All right. I greatly appreciate the question. I'm glad you asked, but I'm definitely not familiar with it. It sounds like a cool company, especially in this day and age. I really don't even see any news about it. I just see different companies and just information about the company. That's really it. Well, there is a Reddit page for it. Apparently, it's got 70% or so short interest. Oh, maybe this is why. So there's a Yahoo News. Let me bring it over to the main screen here. When was this done? June 16th. So this wouldn't affect the after hours. Title Metaverse Games section officially released. Color World brings new fresh entertainment technology. Color Star Technology, an entertainment technology company with a global network that focuses on an application of technology and artificial intelligence. Well, that's completely different from what I read in the description. Maybe this is why it's moving. Oh well, that's a cool little company. But again, I don't really look at penny stocks that often. Nvidia got dragged down to Nvidia did make new lows today. NVDA is the ticker for Nvidia. It did get dragged down. All semiconductor stocks today got hit. And from what I was reading about it, is it really comes down to a global growth concern. And so they all got, even let me just yeah, volume was up a little bit but still below average. Volume today 48 versus 49. Okay, so volume was just under average today. That could have helped from it falling even more than that 2.75. Up 0.15 in the after hours. But if we look at the semiconductor index, SOX is the ticker symbol for the Philadelphia Semiconductor Index. I mean, this is going to judge what the down 2.2%. And you can see that since the fall 2 weeks ago, it just hasn't been good news for them. I mean, they couldn't even get back up and tag the top up here on its last rally right here. It couldn't even get up to that resistance area. And then this big downfall right here, cutting under those two, the 50-day and the 21-day moving averages. I mean, this thing is just setting up. I think it's going to go even lower than this, unfortunately. It seems like investors are just backing away from the semiconductors right now. And I think they'll just continue to do that for a little while, which is why when talking about NVIDIA, I think NVIDIA is one that will be here for a while. I think it'll be a champ, a winner, but it's going to have to get through this bear market. And I think I'm going to have to end up adjusting my buy zone here a little bit lower. I think it's possible that NVIDIA could get down and tag some of these lower areas, like this one right here in March of 21, maybe even this one right here, which is October of 2020, and I mean September of 2020. The bottom end of this green box, which sits about what is this, about $120. I think NVIDIA could get down lower there. But again, once it gets to 150, that's when I'll start watching it closer and see how far this thing might go down. And I'll definitely jump in once I think it's found some sort of a bottom or it's reached a low within this box, maybe getting down to the $120 a share before I would jump into it. So, okay, let's go to tomorrow. Well, wait, one more thing I want to mention about today before we talk about tomorrow, because there's some inflation numbers that could have the weight to move the market tomorrow. We got our third estimate for Q1 GDP today. And each time it continues to go higher or lower, however you want to look at it, right? First estimate, it was negative, so a contraction of 1.4%. Second estimate, a contraction, negative 1.5%. The third reading today, we got a contraction, negative 1.6%. So this economy is slowing down faster and faster and faster. I'm surprised. Well, actually, I'm not surprised that it didn't rattle the markets any more than it did. I think with the market already seeing a negative 1.5, a negative 1.6 wasn't that big of a deal. It wasn't that much of a difference, right? If it was like went from negative 1.5 to negative 2.0, yeah, then of course it could. I just don't think that was that big of a drop for it to really mean anything. But I guess I could say that the main thing to take from this is that consumer spending, it's not as strong as it's been reported. That's the big thing that I would take. Now, why didn't the market sell off today? I'm first on a few puts that I'm swinging. Why didn't the market sell off today? Because I think the market is waiting for tomorrow. I really do. There wasn't that big, the news today, what came out, it wasn't that big of a deal, I think, for the market. I think most market participants, they've heard it before, and nothing was shocking. Tomorrow, though, is different. Tomorrow, we could get something to shock. So first off, tomorrow we get personal consumption expenditure. Oh no, my bad. It's not consumption. What is it? Personal income. Personal income. And it's expected to be at about 0.5%. And then we also get personal spending. And that's also expected to be at 0.5%. That's not really going to move the markets tomorrow, but it will be something interesting to see about the consumer. What will have the weight to move the market are these three things, and they come out tomorrow. First is the Chicago PMI. The expectation is 58.8 for June. It was 60.3 in May. And remember, anything less than 50 means contraction, means it's shrinking. 58.8, which is the expected reading for tomorrow, that's slowing from the previous reading, which would be expected, but it's not a contraction. It's still growing a little bit. So that will be released, I think, 9:45 tomorrow morning, Eastern. That has some weight. The big weight tomorrow is the PCE price index. The expectation is 0.7%. Last month, we got 0.2%. So they're expecting inflation to actually be a little bit bigger. And what the Fed actually looks at the closest for a read on inflation is core PCE. The expectation for core PCE is 0.3% for May. Now in April, it was 0.3%. So the expectation is that it's not really going to move. Core PCE, month over month, is going to stay the same. That's what the Fed will look at. That is the biggest weighted piece of economic data that we get tomorrow that will move the market one way or another. If it comes in and it's right on cue, it's what's to be expected, especially core PCE, 0.3%. The market could rally off of that. But if core PCE is something other than 0.3% month over month, then that could bring the market down. It comes out at 8:30 a.m. Eastern, so 30 minutes before the market opens. Now, if there's a miss and core PCE is higher than expected, my expectation is the market will drop lower. That's the big one tomorrow. Core PCE, 0.3%. How is it compared to that number? So that's why markets didn't sell off today, and that's why markets could sell or rally tomorrow. So let's look at some key areas here. I'll go SPX, then SPY, then Nasdaq, then Qs. All right. So for the S&P, I'm going to take volume off here too. I don't need to see that right now. All right. So today, basically being flat, it kept the candle right on top of the support area on this falling wedge pattern that it's in. That to me is a positive sign that it didn't drop any further. Now, let's go into the 15-minute chart on this. Okay. Now, let me get the highlighter here for just a moment. We have right underneath this support area, there's a gap there that needs to be filled on this 15-minute timetable. If we look at what happened today, we kind of filled that gap in this low point right here. We did get to the top of the candle wick, but the top of the candle would actually be the red line that's right here. Okay? So I could almost give it that we filled that gap today because it did dip under that line just a little bit for about, maybe 5 minutes and then maybe for 10 minutes. So 15 minutes out of the day, it was down there underneath. Open it up a little bit more. Now, that big decline, that was yesterday. Today, flat. So tomorrow, I'm looking at the level 3,800. If we can stay above 3,800, which is basically right along the support area, that's positive. If core PCE is hot and it shows inflation is rising instead of cooling, we'll dip below this. And if we do, then I'm probably looking down here for an absolute failure. This is probably where it would go. We do have this gap right here, right along this line, that does need to get filled back in at some point. If we measure this, I think this would have to be a really big move. Yeah, like 3.3%. For us to fall 3% on the S&P 500, core CPE, that reading has got to be really hot for the market to dip that much. Everyone's got their own thoughts on inflation. I think inflation is still rising. I don't think we have quite seen peak inflation yet. So 3,800, that's a key area to hold for the S&P 500 tomorrow. If it does dip below that, then where could we go? Maybe we could go to an average of probably somewhere in here, 3760, 3780. That could be an area to look for. All right. Let me go to the SPY. All right. So on the SPY, we've got this same setup here. There's a small gap. It got filled today. Man, it's kind of like in the middle of its own falling wedge on the SPY. So if we're going to fall, we have an area that we have to go down to 378. That's only $2 from where we are now. The next hole puts us at 375. 375 to fill the second gap that's there. And then another area that's kind of interesting is right here at 369, 370. I think that could be an area to slow it down if it falls hard tomorrow. If we get a good reading and it rallies, then we can go back to, where we started this week, maybe around this 21-day moving average up here, which would put it around the 390. That would probably be a good place right there. And that catches the bottom right there, and it catches the bottoms right there. That could probably be a little area of resistance. So depending on the news, 390 to the top, maybe 375 to the bottom. Not much of a swing there. And I could be totally wrong, but just looking at the chart, those look like the areas. Going to the Nasdaq, it had a little positivity today. Yesterday, it filled in its own gap, so I can actually remove. What am I doing? All right, let's go here. All right, let's remove this. We filled that gap in today. So if we get bad news for the Nasdaq, then we're probably looking. Oh my goodness. I mean, it is just, wide open. Probably about here, 11,400. That could be a low area that catches these bottoms for the green, but also the tops for the reds. And if we go look at the Qs, and we're going to wrap this up. I'm almost done. QQQ. If you have any questions, go ahead and throw them in now. Okay. Just like on the Nasdaq here, we can get rid of that gap. It was filled in. So we have this resistance up here that we ran into right here. So if we do get good news, getting up above this resistance area, it may slow us down somewhere around 290. Maybe as high as 300 at probably the max, or maybe 295, because that's where the gap here was left. That would probably be a resistance area, 395 right here. If we get bad news, then our first area to look is probably right here at 279. And then the next area after that, technically speaking, is probably 274. So that's the areas I'm looking for, those four products. The SPX, the SPY, the Nasdaq, the Qs, and I'll just touch on the Russell 2000 here real quick, and then we'll wrap this up. The Russell, again, it ran into pressure against its 21-day moving average when it was rallying. Now that it's falling, I mean, the candle that was made today is probably 50-50 candle and wick. So it was a real indecisive day. If we go look at the 15-minute chart here, it really curled right in. The big drop was in the morning. All right, go back to the daily. So if we're looking, the wick did fill this gap right here, but the candle did not. So if we fall, I mean, we could go 1690, maybe even test this low down here at 1648 down there. So that gives us distance either way, whether bad news or good news tomorrow on core PCE that comes out at 8:30 Eastern time in the morning. And again, that's what the Fed uses more than CPI or PPI for a read on inflation. So that will move the markets tomorrow. All right. Anything else? So we will wrap this up for this evening. Just real quick, if there's nothing else, I do appreciate you, each and every one of you, for joining me today. Greatly appreciate it. If you could do me a favor and click that like button, that really helps out a small channel like this. Also, sharing the video, subscribing if you're new. Those are great things to help out the channel. Cost you nothing, just a couple seconds of your time to do it. And if you really like this perspective, click the first link in the description and you'll get a ton of information. All right. Where do you see Tesla going? That's a good question. I think under 500 maybe. 500 is a very key level for Tesla, TSLA. That's actually where I've gone shopping for Tesla over the past few years at 550. Let's get the daily chart. All right, so Tesla right now at 685 a share. If it continues to fall, if it's got bad delivery numbers, the next real area is probably in a zone between 600 and 555. That's probably the next big area of support. And that's going back and looking right through this area right here and this area here. So 600 to 555. That's probably the next zone if it continues to drop. Otherwise, on a more local scale, 645 is an area that has some mini reactions, which are right here, and again right through here, and again right here. So 645 should provide enough stomping on the brakes to slow it down. Once it breaks below that, and I think it will, I don't know how long it's going to take, whether a week, a couple months, or this October. Once it breaks that, then you're looking 600 to 555. And then for a third zone, if it continues to break down, then we have to go back and look at this area right here for any type of support. And the top of that is $450. So those are the three areas right now. Let's call it, make it easy, call it 650. And the bottom for that, we'll call it 640. So a $10 zone. The next zone down would be 600 to 655. And then the next zone down would be 450 all the way down to 400. Those are the three zones there for Tesla as it continues to come down. So I don't think it'll be a hard drop. But if they miss this earnings, I think it will be I think a lot of investors will lose a little faith in Tesla if they do miss this upcoming earnings. And then once Tesla starts falling, then you've got all those stop losses kicking in, kicking it even further down the chart. So those are the three zones for Tesla as it's coming down, where I could see maybe a little pause in the fall as it's coming down. And I don't think 2019 theory is going to play a role. If it did, that would just, oh my gosh, that would, I don't know. I don't even know what I'm saying at that point. All right. Any other questions, or we'll wrap it up for today? Wow. We covered a lot of topics today. Even got into a penny stock, which is rare. I mean, do you see Tesla beating on earnings? I think it's too... this earnings for Tesla, I think, is tough because of the shutdown in Shanghai. Also, Elon Musk making the comment about Berlin and Austin losing billions of dollars. That also seems like it might be a little sign from Elon that's saying, hey, Tesla's going through a rough patch right now. Earnings aren't going to be great. So I think Tesla is at risk this earnings of missing. I don't have any data to back any of that up at this moment. But I'll dig into it before it gets to earnings. What are we, 26 days away from earnings? So we've got a little time. I know Tesla likes to really try to get things going and pump the company up as time goes on, as they get closer to earnings. But as it stands right now, I think Tesla is really at risk. 4 hours ago, happy Tesla IPO anniversary. Here's how much investing $1,000 in the Tesla IPO is worth today. Only one though. It's risen a lot. But we can dig into Tesla maybe next week. I'll do some research over the weekend to try to figure out what data is out there to back up how at risk Tesla is of missing earnings. All right. Well, thank you everyone for being here today. I greatly appreciate it. And I'll be back here tomorrow with another live stream after the market closes. Fingers crossed for core PCE and PCE data tomorrow. Is inflation hot? Has it cooled off? I really don't think it has slowed down. So we'll see tomorrow at 8:30 in the morning. And whatever that reading is, month over month, 0.3% is the expected percentage. 0.3%. Anything off of that will move the market. And how far away we are from it will depend on how quickly the markets will move. And I don't think inflation's gone down. So watch out for that. I'll post it on Twitter as soon as it comes out. And also our investor community on Patreon, you will get that information right away as soon as it comes out as well. So if you want to make sure to get that information, click the first link in the description. Join our community over there. Ton of information gets released nearly on a daily basis. All right. Thank you again. Have a wonderful evening and good luck tomorrow. And I'll see you after the market closes. All right. Thank you. Have a good night. See you in the next one.